What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame. Got Mortgages coming at us live with another episode of Monday Market Update. We are going to go over so many different things that we have going on. The market, the government has reopened, right? We're going to go over ADP's private payroll from a weekly perspective, actually showing that there was almost 11,000 job declines. Super important for us to see that now that the government is back open. Remember, we've been flying pretty much under the radar and having no data whatsoever for roughly a little over a month and a half, right? And it's important for us to take a look at this because you know as we saw the jobless claims continue to come in low, we started seeing private payroll, almost 40,000 losses of jobs. We started seeing a lot of different things start to come up when it came to retail sales. But then obviously the government shut down by just about almost a month and a half, and we kind of started flying out in the dark. So, as always, I'm going to share my screen. We're going to go over what happened last week, like we usually do, tie it in, and kind of put just an idea of where we're going to expect the market to transition, and then take it from there. Okay. So, you guys can take a look at it here. Again, the government has gone ahead, as I said, and reopened. The biggest part is going to be when will we get some data? We know, of course, that the market obviously reacts to inflation and employment. We haven't gotten some data on that in a while. We know that the Fed is going to meet in about 3 weeks, right? Their final meeting for the year, December 9th and December 10th. And if we take a look at it, let's see what is going to be the expectations for a rate cut. If we see this here, we will actually see, again, the likelihood of it. Let's pull it up here. See the Fed watch. What's the likelihood of them cutting? Again, in my opinion, I last checked it. I think it was at a 60%. You can actually see here, more or less, we're probably going to stay almost 60% on target. 57% likelihood that we are going to stay pretty much flat as to where we're at right now. Roughly about 42% saying that we will probably see another 25 basis point cut. Very important for us to keep that in mind because we know, as we had mentioned, that when Fed Chair Jerome Powell said that we're on a no risk-free path forward, right? That's important for us to look at because understanding that obviously the Fed cut twice. Last year they cut 3 times, right? It was September, October, and December. This year we more or less saw two of the same. I don't, in my opinion, think that we should cut next month. I think we need to kind of allow the market to balance out and try to see what some of the impacts of the Fed rate cuts have done to the market, and then take it from there. But again, a quick refresher. We talk about this all the time. When the Fed changes rates, they adjust short-term rates, right? The federal funds rate for overnight borrowing rates for banks. Basically, what banks are starting to charge between one another. Obviously, big impact again where it strongly influences mortgage rates, but it doesn't go over the broader economic trend. If we take a look at it here with ADP, as I had mentioned, ADP's most recent data actually showed 42,000, right, jobs in October from a monthly basis, which in my opinion makes absolutely no sense, right? We're, of course, talking about a lot of different job losses from a weekly perspective. So if we take a look at ADP on a weekly perspective, they cut roughly about 11,250 jobs really per week in the last 4 weeks. I do think, again, that as we start getting that updated data on the BLS report, Bureau of Labor Statistics, on the job opening and labor turnovers, those numbers should obviously outride that. Remember, of course, we did see that the federal government was shut down for a while. That should play an impact to the numbers. When we talk about home values are up just shy of 1%. Again, ending that 9 consecutive months of just slow depreciation. Remember, it's on a national basis. Home value. So if we look at this again, Totality is estimating home values to jump up again another 4%. So if you bought a $500,000 home, your home jumped up $20,000 in a year. Again, one of the power of purchasing real estate and the importance of you staying on top of some of the different aspects when it comes to building generational wealth. Retail sales, we know, obviously jumped up and rebounded in October, declined slightly in September, bounced back in October. We're now showing that consistent 7 of 9 retail categories posting monthly gains. What are we going to look out for today? We're going to get home builder confidence tomorrow, existing home sales on Thursday, and then the BLS report. This should be important. They're going to release their delayed September job report on Thursday. Another thing that we want to take a look at, again, as mentioned, we've been flying in the dark for a little bit. So this would be a good idea for us to kind of just get a glimpse. I think that would have some market impact. We could take a look at interest rates. We're kind of, since September, around a little bit, you could say we're battling this ceiling between 6% and 6.5%. Obviously, we're slowly, consistently going down, but important for us to take a look at the 6% to 6.5% and kind of see where the market is at and what is going to be the transition. Obviously, we're moving slightly in the wrong direction since the start of the month. Again, remember, every single time we have seen as the Fed cuts their interest rates, we see interest rates go up. The Fed cut in September, interest rates went up. The Fed's cut again in December, interest rates went up. And then if we see here again in September, the Fed cut, rates went up. Fed's cut in November, rates go up. Okay. So important for us to remember, we're looking for the comments that the Federal Reserve is going to make, not necessarily just the fact that they are going to be cutting their interest rates. Okay, guys. So important for us to take a look at all this stuff. Obviously, I will keep you guys updated as we continue getting some of these updates. And of course, if you guys have any questions, make sure you guys like, comment, and visit our channel. Just past the 600 video mark, which is awesome. Want to continue keep providing us these weekly market updates as we continue on this trend to educate and provide value at scale. Appreciate you guys. Again, visit our website, gotmortgages.com. And until next week, talk to you guys soon.